If you're new to trading, welcome. Trading is the process of buying and selling financial instruments, like stocks or currencies, with the goal of making a profit. It can be an exciting and potentially lucrative way to invest your money, but it's important to understand the basics before you get started. Let's start with some key concepts. What is a financial instrument? A financial instrument is a term used to describe assets that can be traded, such as stocks, bonds, currencies, and commodities. These assets have value and can be bought and sold on exchanges. What is an exchange? An exchange, in the context of finance and investing, is a marketplace where various financial instruments, such as stocks, bonds, and commodities, are bought and sold. Exchanges serve as intermediaries between buyers and sellers, providing a platform for transactions to take place. They establish rules and regulations to ensure fair and efficient trading, and often have strict requirements for companies to be listed on their exchange. What is market analysis? Before making any trades, it's important to conduct market analysis to identify potential trading opportunities. This includes analyzing financial news, reading company reports, and monitoring market trends. Understanding the market can help you make informed trading decisions and maximize your profits. What is risk management? Trading is inherently risky, so it's important to manage your risk by setting stop-loss orders, diversifying your portfolio, and never risking more than you can afford to lose. By managing your risk, you can protect your investments and minimize potential losses. What are trading platforms? Trading platforms are software applications that allow you to buy and sell financial instruments. There are many different trading platforms available, each with their own unique features and fees. It's important to research and choose a platform that best suits your trading needs. Now that you have an understanding of these key concepts, let's move on to some tips and strategies to help you get started. Start small. When you're new to trading, it's important to start small and learn as you go. Start with a small amount of money and gradually increase your investments as you gain more experience. Paper trading. Paper trading is a practice of simulated trading, using real market data without risking any actual money. It's a great way to practice trading strategies and get a feel for the market without risking your hard-earned cash. Keep a trading journal. Keeping a trading journal can help you track your progress, analyze your trading performance, and identify areas for improvement. By documenting your trades and your thought process behind them, you can improve your decision-making skills and become a more successful trader. Stay disciplined. Trading can be emotional, but it's important to avoid making impulsive decisions based on your emotions. Stick to your trading plan and stay disciplined. This can help you make more rational decisions and avoid costly mistakes. Trading can be a profitable way to invest your money, but it's important to approach it with caution and discipline. By following these tips and understanding the fundamental concepts of trading, you'll be on your way to becoming a successful trader. Thanks for watching. Don't forget to like, comment, and subscribe for more videos like this. If you have any questions or comments, feel free to leave them below. Take care, bye-bye.